Welcome back everyone to InvestQ, and as me and you both know, BigBear.ai has had recent developments as of lately. But real quick before we get into the topic of the video, I do want to point out that tomorrow I am premiering a interview with the CEO of Castellum, Glenn Ives, and it'll be premiered at 9:30 a.m. tomorrow. So if you're interested, feel free to tune in and have your notifications on. But anyways, getting back to the topic, BigBear.ai, they've gone from doing numerous things such as expanding from its airport security business. They've also been growing its AI software portfolio. They definitely have improved their gross margins too, as much as, if I believe correctly, it's 34% at the moment. But despite all of the recent developments for the company, we do see here, and well, not necessarily we do see here, but we will be seeing this upcoming August, their next quarterly report, if I'm not mistaken, is set to take place on August 10th of 2026. And a lot of people are very interested, both for good and bad reasons. They're very concerned as to what the results will be for BigBear.ai. So today I want to be discussing what investors in Wall Street will be watching. So first and foremost, let's talk about the first bullet point right here, and that's regarding their revenue. So revenue, management, they have reaffirmed that the full year revenue guidance of anywhere between 125 million and 140 million for the full year has been reaffirmed. So that is good. We always love to see when management reaffirms any type of forward guidance for a company, but that's just management's talk. We need to actually see the financial data, and they want investors overall. I do believe that they want proof that the company is actually converting that momentum into stronger top line growth. And if revenue starts accelerating, it would help validate management's outlook. So the second area investors are watching closely is gross margin, because this has quietly become one of the biggest parts of the investment story. BigBear.ai has been transitioning away from lower margin services, and they have been transitioning towards higher margin AI software, which has been reflective of the previous quarterly from what we saw from their recent gross margins here. BBAI recent gross margin. I'll just put that visual for you there right now, the 34.04%. And this was following the acquisitions like Ask Sage, CargoSeer, and ever since then, we have been noticing that gross margins has been improving. So the big question now that people are asking is regarding whether that improvement can continue or if it was just a one-off thing in the previous quarterly. Because what that signals for the company would be that higher margins generally mean that every dollar of revenue becomes more valuable. So the next thing I want to talk about is this. I just mentioned a little bit ago, but the recent Ask Sage acquisition, which, as me and you both know, was not too long ago because it was finalized on December 31st of 2025. So literally at the very end of the year for 2025. And what this acquisition did for BigBear.ai, due to the fact that what it actually did is it gave BBAI an actual AI platform, and that is already being used by organizations including people like NASA, for example, big one right there, the Army Intelligence and Security Command, and the Naval Research Laboratory. And investors now want to see continued adoption, and they also want to be seeing more customers to whether or not they can continue to have higher amounts of customers come in. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. And also, they want evidence that BigBear can successfully cross-sell this technology across its existing customer base. And if management can demonstrate that it would support the company's transition toward a more software-driven business model, that would be green flags that a lot of investors want to see for the company. And that's the question. They want to see them actually be able to do it, and that would be a green flag. Now, the next thing, which was one of the reasons why I invested in BigBear.ai in the first place, is because one of the key things that I always look out for whenever I'm looking to put my hard-earned capital into a company would be real-world market usage and real-world usage. And regarding the airport security technology, the facial recognition scanner, and all the technology that they already were deploying and had readily available for people to use. Uh, Again, that's just one of the key metrics because you want to see a business actually having real world usage and actually adding value to the marketplace in some way or another that actually can generate revenue for the company. And what recently was also announced was regarding the Panjam threat detection platform that received Dutch national approval after independent testing. And this adds another layer of credibility to the technology that's already deployed at major airports. Now, investors will be looking for additional commercial wins. They're also going to be looking for more customer adoption and signs that these security products begin contributing more meaningfully to the company's revenue. The next point I want to talk about is how the company, since they're also expanding its logistics uh, through businesses through CargoSphere and CargoSeer, these products help customers optimize shipping logistics and predictive analytics. So the opportunity, the opportunity that is presented here is that the recurring software revenue rather than relying entirely on government contracts, because again, this is another way to help increase and improve the financials of the company, because as we know, since BigBear.ai is in the defense market, in the defense sector, a lot of companies in this sector rely heavily on government contracts. And as you and me both know, government contracts aren't necessarily stable the same way that quarter over quarter, the revenue that can be generated from services that a company can get and acquire quarter over quarter and year over year, that's a lot more stable and a better way to generate consistent cash flow for the company rather than just waiting for another government contract to be awarded to them. Because again, in a way, it can be a little bit hit or miss, but it also, even though that is good for a company to win government contracts, it's still just not as stable as just increasing the revenue through services that the company can offer. And investors are going to be looking for updates showing the business if the business can continue to grow traction. Now, finally, speaking of defense and the defense business as a whole, investors still want updates on the core defense business because earlier this year, the company did announce a $53 million sole source classified intelligence contract, which was helping push backlog to approximately that record number that we have known recently, which is 281.9 million, I think. Let me just make sure that number is correct. I'm pretty sure it's correct, but let me just make sure. So 282 million. So yeah. So Wall Street, they still want to know whether that backlog is going to continue to grow and whether additional contracts are going to be awarded to the company and whether management remains confident in future government demand. So while many people focus only on the earnings per share, which is what a lot of people really look at as soon as the earnings report comes out, I think the bigger story this quarter will be whether BigBear.ai continues proving its transition into a higher margin AI software company. And for me, the biggest thing that I'll be watching, the metrics I'm going to be paying attention to are revenue growth. Can they actually generate more revenue? I heard recently Will Rich, he was talking about how I think they're expected to have 37 million, I think. So anywhere in the 37 to 40 million dollar range would be good for the company. See if there can be more expansion within their gross margin. The Ask Sage adoption. I want to look to see more about their airport security and if they can continue to expand in that way with the technologies what they have within their airport security. I'm also going to be paying attention to what I said earlier regarding their supply chain growth and overall just going to be looking at continued momentum in the defense business. And overall, if BigBear.ai can execute across those areas, this earnings report could provide investors with a much clearer picture of where the company is heading long term. And as always, Thank you all very much for watching InvestQ. If you enjoyed today's video, continue to hit the like and subscribe button. And comment below what it is you think about BigBear.ai, how you're feeling about these upcoming reports coming up this August, and overall what it is you want to see in future upcoming videos. And again, please feel free to tune in this Thursday, tomorrow, 9:30 a.m. EST, to check out the interview that I have with Glenn Ives. So with that being said, guys, David over here at InvestQ, stay safe, keep making good decisions with the long-term portfolios, and I'll see you on the next video. Peace.